Good evening, everybody. Mike Vacchi, Princetontrader.com with your Wednesday evening recap. Okay, daily chart, and you can see they pushed below lower Bollinger Band today. They did 2262. That was pretty radically rejected, and we traded as high as 2465. So they've taken about 200 handles off of there. Is it a dead cat? Can it head higher? The key is going to be, can it take out the high from today? Can they do that tomorrow? So 2486.25. And if they can, then they still have to deal with 2550. So hourly chart, you can see them retesting 2400 here from above. That's going to be important. Daily pivot is underneath. You see the lower Bollinger Band down around 2270. You see the hourly mid band sliding in there right around the daily pivot. That comes in, in and around, call it 2390. So 2390 to 2400 is going to be, for me, that's an area of support that the bulls are really going to have to work hard to defend. I'm not surprised it's getting a test now. The issue is, does it hold? If it can, then they got to take out the Globex highs and make some progress overnight. What's been happening is, Europe comes in and just crushes it. If that continues to be the pattern, then we're going to wake up to something a lot closer to 2300 than we are to 2400, but we'll see. I think the tape has been more respectful of technical levels in the last 2 days. I think it's been more tradable in and around the edges. It's been a little choppy, but volatile tapes are always going to be choppy. And then it's given you some really nice moves. So, the handles in the room continue to be just completely off the charts, and that's great. And it's a product of volatility. What it is an opportunity for people to come in and have some success and do it in a way with how we do it where, we're very risk focused. So if you're struggling out there, at a minimum, we can stop you from, doing yourself a truckload of damage on the E-minis and get you pointed, in the right direction. I would emphasize again, we talked about this last night. If you didn't watch last night's webcast, I would encourage you to watch it. We talked about just the one little tip on entries that I'll give everybody out there in a very volatile market. No anticipatory entries. Don't take an anticipatory short on a 1 minute candle that's rocketing to the upside. Because even if it does come back, it may come back 20 handles later. This tape is experiencing 20 handle chop zones. At the same time, don't come in and anticipatorily buy something that's headed down. There's, it may stop, it may not. And if it does stop, it's not going to stop on a dime. It's going to stop at a dime plus about 10 or 15 handles, which is enough to take you out of any responsible disaster stop that you would have on the trade. Instead, the better way to go is to wait for a move to exhaust. Let it come back towards the upside. We let it come back towards our risk marker. That's why we don't use hard stops except for the disaster stop. We use risk markers, which are areas that need to be converted. That's why what we do turns out a lot differently than what most do. Because we understand that the MO in the minis is to try to run people out of trades before taking things in the direction that they want to take it. So I let that come in a bit before I hit resume on the video. So we came back into 2390, hourly mid-band, daily pivot. You've got volume weighted average price and our proprietary moving average that are sitting there at 2420. So basically, it sounds crazy, but you have a 30 handle chop zone. And in this kind of a tape, my rule of 10 applies. So what the hell are you talking about? Rule of 10 is this. You take the nonsense on that chart, the crazy blown out areas, the fact that every line on this chart is 50 handles. You divide any move by 10, you have your typical E-mini futures move. So we are in a 3 handle chop zone, 2390 to 2420. 30 is acting like 3. That has to make up its mind in order to go ahead and go from 20 up to 65 for a little 4 handle middle of the night pop. Or if it breaks 90, then it can come back in 4 or 5 handles, meaning 40 or 50 handles, back in towards 2350. And if 2350 holds through the night, and we find, what we're going to find is generally we are jammed up between 2350 and 2550. With a little outburst to the downside and pretty solid resistance on the upside. So until 2550 makes up its mind on the upside, and until you can see a sustainable trade below 2350 for a period of days, we could continue to just kind of churn around. Look, it's insane, but if you look at the session this week, and you can't worry about whether we're limit down or limit up, it's just numbers. We are, for the most part, with the exception of this little push down, we're carving out a range here, a 200-point range. Yes, that's crazy, but it is what it is. And until that range decides, then you're not going to get either the big push up to test some of these other areas. Like here's your 9-day, 2570, although that's diving to meet price pretty efficiently now. Or some of these deeper areas below 2200. It's got to play out. Remember the entry. No anticipatory entries. Remember the rule of 10. Respect price and respect risk. And, if you're considering the place to trade this stuff all day, we'd love to meet you. We'd love to have you. All right, take care. Trade them well. We'll be out. We'll see what it does the rest of the night. We'll have the morning webcast, and we'll go from there. See you. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.